You can see the top management of Bharti and Mr. Dhillon is now addressing the press. Yes, please. Let's start across.
Talk a little bit about the events of the quarter. I think it's been quite an interesting quarter for the telecom sector as a whole. For us as an organisation, and not in any particular order, we have this quarter completed our IPO process for Infratel. As you know, this is something which we've been looking at for many quarters, and many questions have been asked previously as to when this is going to happen. So in December we completed that process. As you know, there was a 10% public offering, of which about 3,200 crores has come back into the company as part of its primary offering. That's an event that's taken place this quarter. As far as the second issue, I think which is a significant one in the quarter, was the, I would say, rather somber and lukewarm uptake as far as the spectrum auctions are concerned. Clearly, these input costs are something which the market is considering, operators are considering, in terms of financial viability of the sector and also financial viability of operators. We ourselves obviously looked at it from a very commercial model as far as this quarter is concerned, and bid really only the Assam license where we picked up a slot in November. The third area I think which is of interest at this point in time, and I think is very, very important, again an input driver as far as costs are concerned, is one-time license fees. As you know, we received a demand of about 5,200 crores. This is now being stayed by the courts, as you know, and we will see what will happen going forward, and it's subject to matter at this point in time, so probably won't comment any further. But it's another area where we are seeing huge input costs in the sector. So let me just focus on that a little bit as well. These input costs are driven principally by such issues as one-time fees, maybe the new spectrum auction and what will be the minimum amounts required, other regulatory interactions or interfaces which have taken place in the last few quarters, including processing fees, etc. And also what we're seeing as far as diesel is concerned. As you know, diesel is a huge cost for the sector, where we don't have direct power availability in many parts of the country, and that is both for the service provider and for the tower company. All in all, with input costs rising, this has, and going forward, does have an impact, I think, on pricing, especially in the Indian market. And I think Africa, and Manoj will tell you, that faces very similar challenges, and has a pricing impact going forward, like I said. You have seen some elements of pricing announcements taking place recently, some corrective action. It's not really on the prevailing price. It's more to do actually with any discounts, freebies that are in the marketplace, wastages, leakages that operators are working on to improve margins as a result of the input cost that's being driven. Having said all of that, there is a positive note in the sector, as I mentioned last quarter as well. And we ourselves, as Airtel, have taken a large plank in that. The plank really is one of data. Data, as you know, we've taken licenses in India across 13 states for 3G and for 8 states in 4G. We've launched all the services, as you know, in 3G and some services in 4G today. This quarter, last quarter, also Pune was launched. And I think with a $3 to $4 billion investment we're making, we're seeing some traction now taking place. And you'll see that in the quarterly report that we've been publishing now. Data growth in India is taking place at least 25% clip per quarter, quarter on quarter. It's got 20 billion this quarter as far as MPs are concerned. In Africa, we have 11 of 13 licenses today where 3G is prevalent. And year on year, even in Africa, revenues have grown nearly 80%. So this is an area where we think investment will yield, especially as existing customers migrate to using data services, where incremental costs of infrastructure are less because you've already paid effectively for the passive infrastructure somewhere along the line, and also active then comes along as an incremental cost with very little energy additions. So that kind of margin we expect to flow through to the network. In India itself, we have today, I mentioned, 25% quarter on quarter growth, and we do have now 20% of the customer base using some form of data services, and this quarter has crossed 5 million as far as 3G users are concerned. Now just back to the results for the quarter. They're at 202 billion as far as revenue is concerned. That's a 10% growth year on year. If you recall, last quarter we did have a favourable TDSAT judgment for us, which had a one-time revenue impact of nearly 600 crores, a favourable revenue impact. Right, so if we adjust for that, actually we've grown revenue in the quarter by just under 3%, as that was a one-off. That one-off obviously had an EBITDA impact and a net profit impact also. The net impact was about 240 crores. As a result of that, you do see EBITDA margin this quarter at 30.6%, but like I said, that has the favourable impact of last quarter is also accounted for there. As far as net income is concerned, you see that 700 crores is down to 200 crores. The difference really is in two areas, and I think this is very, very important for the market to understand. Last quarter, at least 240 crores of that was the one-time benefit we had, so if we adjust for that last quarter. And this quarter we have had an adverse forex impact. So if we kind of normalize for the two, it's actually quite a steady state profitability for the 2 quarters. Just moving now to the capex front, we had just over $438 billion of capex in the quarter. That takes us to about $1.8 billion for the 9 months. We should therefore kind of achieve what we think will be the capex for the year, and it's fairly in line with what we gave as a guidance. A couple of more points on the balance sheet. I mentioned earlier IPO proceeds that came in the quarter, so obviously that has had a favourable impact as far as our ratios are concerned on the financial side. $11.7 billion is now the net debt, which is 2.58 times to EBITDA, and that's improved from 2.71 from a quarter ago. So Manoj will take over in a minute. Just before he does that, maybe I just have one last word on the tower companies. As you know, yesterday we did announce the first quarterly results on a public forum, and that, as a result of that, revenues grew in the towerco by 8%. EBITDA improved by 10% year on year, and profitability 31%. So you see that business as a robust business model. It's a B2B business model. Annuity of revenues is very, very important there. Long-term contracts are there for 7.5 years on average today. So it's a fairly stable business. Banking, again, on data traffic taking place. I think I'll now hand over to Sanjay, before he hands over to Manoj for India first and then Africa.
Thank you, Sarojit, and a very good morning to all of you. I must say, after Q2, which is always a very tough quarter, there's been a big operational recovery on performance during Q3. If you look at our underlying EBITDA margins for this quarter, you will see that in all our business segments, the margins have gone up. So mobile, telemedia, DTH, Airtel business. Q3 was also a quarter where the first-time activation process got introduced, which is a very stringent one. And while many of you saw decline in the reported numbers of customers, our personal opinion is that this has been very good for the industry, because what it's done is it's brought cleaner intake of customers on the table, and has been accretive for the industry on the wasteful expenditure that was happening in the market as well. So while you see a decline in numbers, you see the VLR ratios dropping up, which is the real live customer. In our case, the VLR ratios in December has breached the 95% mark, which is very healthy. The other good sign of the new practices in the market is churn has begun to come down drastically, and that's again very accretive and good for the industry and good for Bharti Airtel. So churn, for example, for Bharti Airtel came down from 5.9% and has come down to 5.9% and has seen a 2.6% reduction over the previous quarter. When you really see December as a month, the figures are even far more encouraging. So obviously it's on a good trajectory and the direction looks very favorable. Despite reduced acquisitions in the market, which obviously impacts the number of minutes, we are happy to report 6.6 billion minutes that have been added on the network. Let me quickly come up to consolidated results for India South Asia. While the revenues have grown by 142 billion rupees, and on the face it looks as a 1.1% decline, but you need to keep in mind you need to adjust for the the one-off adjustment on TV side judgment that we took last quarter. If you adjust for that, then the revenues for India South Asia have grown by 3.1% quarter-on-quarter and grown 8.4% year-on-year. EBITDA margins, which are at 31.9%, on the face looks at 0.8% decline. However, the margins have remained flat when you really look at the adjustment for that one-off that was there in the last quarter. Let me quickly move on to mobile and give some highlights there. Despite the negative net additions, the data has done exceedingly well. 0.9 million mobile data customers have been added on the network, and the data has grown 24.5% quarter-on-quarter. Most of this has come from 3G, and 3G has been fueling the growth of data consumption in the marketplace. The ARPU increase on data is 4 rupees, which is now 47 rupees, and this by and large comes at the back of a few great things that happened in the market. One was the data share plan that we launched. We are amongst the first few operators in the world to have done that. The Appia platform now has paid applications, and we have 2 million app downloads a month on Appia, and we also launched the iPhone 5. The voice usage went up 2.8% quarter-on-quarter, and the minutes per customer being used on the network have gone up by 18 minutes per month, which is a 4.4% increase quarter-on-quarter. Despite of a prop fee change that happened, and that hits the price and the realized price by and large remains flat in the market for us at 42.5 paisa. ARPU has gone up by 8 rupees on the mobile side and is now at 185 rupees. And on a normalized basis, if you see the revenue for mobile, it has grown by 3.9% quarter-on-quarter. Minutes growth has been the voice growth has been led by minutes that have come in, and the non-voice is an upward trend now overall, where we have 17.3% of our revenues coming from non-voice category. Let me quickly move on to telemedia and talk about Q3, which is traditionally slow for telemedia business, but they added more net additions, and that was the focus. And we have seen that we retain our RMS leadership on ILP in the SMB segment. This is a Frost & Sullivan report, and the growth on revenue on telemedia is 0.4% quarter-on-quarter. The EBITDA is 43.5, which is 1.2% up quarter-on-quarter. And this is truly the first data business in our bouquet of services, where 57.6% of the revenues come from non-voice. And this has grown 2.2% quarter-on-quarter. On the DTH side, digitization happened during last quarter, Delhi and parts of Mumbai. Our SOGA improved in both these cities. The churn has come down drastically at 1.3% now, down 0.7% compared to Q2. It's a good story all the way. Revenues on DTH have gone up 8.7%. EBITDA margins now stand at 3.4%, which is up 0.8%. And the ARPUs have again gone up by 9 rupees and are now at 186, almost same as mobile telephony. Airtel's business on the other side has had another impressive quarter on the back of extensive growth that they saw in last quarter. The revenues have gone up 2% over that large growth that happened last quarter, and EBITDA margins have improved 0.7% and now stand at 16.2%. Let me quickly touch upon Bangladesh and Sri Lanka. Investments that we made in Bangladesh have started giving some returns. They also implemented stringent norms on customer acquisition that we are following, and despite that we saw positive improvement on customer net additions. Although we don't declare it, I'm happy to state that Bangladesh on EBITDAs have broken even in the quarter. Sri Lanka consistently showing good performance over the last few quarters, strengthening of RMS and cost optimization in bringing impressive savings on the ground. It was also a strong reassurance on the brand during the quarter, where we launched 3 great TVCs that I'm sure all of you have seen, and Har Ek Friend Zaruri has been given a big accolade through the IFFI Awards 2012.